Hello, everyone. Thanks so much for joining us today for Business Ethics and Insurance. I'm Sarah Kelsey. I'm the External Relations Coordinator for the Risk Management and Insurance Program. We really appreciate our speaker and everyone involved with the programming today. I just have a few reminders for everyone. The webinar is being recorded today. And for any technical difficulties you may be experiencing, please use the chat function. We will be monitoring that. We will also be taking your questions, so please submit those via the Q&A button at the bottom of your screen, and we'll be answering those as we can. And I want to go ahead and introduce Mark Schrode, the president of the Colorado Cpcu Society.
Hello everyone, greetings. I just have a few items to share, and I hope everyone is keeping warm and safe during these swings with COVID and also the weather. Also, of course, today is Veterans Day. I'm sure all of us on the call would like to express our gratitude to our military service personnel, past and present, and also, of course, the families that support them. So thank you. Every year, our local Cpcu chapter grants a scholarship or two to the RMI college students. So I'd like to announce the winners already are aware, and hopefully I'm pronouncing your names correctly, but the winners are Boying Wong and also Sylvie Kapashi. So congratulations, and all of us from the Colorado Cpcu chapter are happy to help in your education endeavors. So congratulations. One of the ways that we can, of course, help is with scholarship opportunities. And another area, of course, is the networking, kind of like what we're doing here today via Zoom, which many of us have been doing for quite some time now. I think at my company back in March, we're all in essence sent home, if you will. But if there's any job opportunities available that we can connect potential candidates with, please email them to me or to Sarah. Find somebody here on the list, and we can distribute it through our network. So happy to help any way that we can to connect those opportunities with, potential the right candidates, right? So. And also, I guess my next topic and final topic is a little bit about the future events with our local chapter. And also, I'd like to say that you do not need to be a member to attend our chapter events. But coming up here, there is a virtual Christmas luncheon, and what we're going to do is I guess a lot of fun things, trivia and things of that nature. There will be gifts and rewards for those that say the right thing or get the right trivia questions, and also feel free to check on our website, our Colorado Cpcu website as well. We'll be posting a calendar of events out here for 2021, and they're not all lunch and learn event type things. Like today's event would have been in person if it wasn't due to COVID. But also for summer of next year, we're hoping the vaccine does take off and that we're all able to get together and actually see each other, see our friends again, and also make some new friends. So look for our upcoming events for 2021. Would love to meet many, if not all of you, actually in person, and hopefully this vaccine actually does take hold for 2021. We're all hoping for a different summer, I think, than what we've had this last summer. Even though it was fun though, right? I'm sure we all had some good COVID parties, but the ramifications with this, of course, with getting COVID or losing a loved one due to COVID, it's been very, very sad in many of our worlds. So next up, I'd like to introduce Ira Selkowitz. Ira is with the CU Denver Business School, and many of you already probably know Ira, that's there at the university. He is the director of the Daniels Fund Ethics Initiative, and Ira, I'd like to pass it over to you, so thank you.
Thank you very much, Mark. And I wanted to thank our co-sponsors and then talk to you just a little bit about the Daniels Fund Ethics Initiative. I wanted to thank the CU Denver Risk Management and Insurance Program, who we're working with on this program, and the Colorado chapter of the Cpcu Society. They've become a very good partner of ours for the last several years in putting on this program, so we're very happy to work with them. and also the Colorado chapter of the Association of Certified Fraud Examiners and the Colorado chapter of the ACFE is providing CPE, continuing education credit, for their members. The Daniels Fund Ethics Initiative Collegiate Program is in 12 different universities, 11 business schools, and 1 law school in a 4-state region: Colorado, New Mexico, Utah, and Wyoming. And the Daniels Fund Ethics Initiative is named for Bill Daniels. Bill Daniels was a cable television pioneer and a sports team owner, and he was very successful in business, in no small part due to his ethical business practices. And you can see the principles of the Daniels Fund Ethics Initiative Collegiate Program on your screen now. And our speaker, Garth Ferrell, will be weaving those principles into his discussion today. When Bill passed away, his estate went to the Daniels Fund, which is a nonprofit private foundation that he had established. And one of the many programs of the Daniels Fund is the Daniels Fund Ethics Initiative Collegiate Program, which is designed to instill business ethics education at the collegiate level, both undergraduate and graduate. And another important part of the Daniels Fund Ethics Initiative is to collaborate with the business community. And this program is an excellent example of how we do collaborate, in this instance, with the insurance and risk management communities. And so we're very pleased to be presenting this program. We're very pleased that you could be here with us. And without further ado, I'm going to now introduce Garth Ferrell, who is our speaker. Garth is one of our most well-regarded faculty members at the business school. He teaches business law and business ethics courses, both at the graduate and undergraduate level. And we're very pleased to have Garth with us today. And I'm going to turn it over right now to Garth. Thank you very much.
Ira, thank you very much. I appreciate that. I hope everyone can hear me. I want to warn everybody that I've already crashed one computer today. And so I'm on my second brand new computer, and it seems to be kind of following in line with what I've already accomplished today. So first of all, Ira, can you hear me? Can everybody hear me?
Yes.
Okay, super. And then I think Kelsey's going to, unfortunately, when you were talking, Ira, Mark's picture went dead to me. So I'm trying to bring up the screen that I need to get this started.
Well, in the meantime, I will mention that I'm seeing in the chat some of your students and some of mine, so I appreciate that. I'd like to also thank Cindy Barroway, who is one of our faculty members at the business school. She has brought along her property and casualty insurance class, just a little bit relevant, the whole class just on P&C insurance, for an event put on by the Colorado chapter of the Cpcu Society. So thank you, Professor Barroway, for bringing your students here today. And I noticed you've signed in as well, so we're glad to see you in your class here. And
so can you, so basically what I'm looking at is a screen with Mark, and it's not responding. Sarah, are you able to pull up my slides?
Yes, they're presenting now on the title screen.
And I'm not seeing that at all on my end. All I'm seeing is when Ira talks, for example, I can see Ira speaking, but everything else is sort of got some kind of anomaly going on here.
Yeah,
but
I'm seeing the ethics, insurance, and pandemic, so I am seeing that. Hopefully you're not just seeing me.
No, I am seeing, the only thing when I actually get on Zoom, I'm just seeing Mark. But I can do this as long, Kelsey, as long as you are on the first page, I can tell you which slides to go to and make sure we're on the right track, okay?
Great, yes.
All right, let's do this, and everybody cross your fingers that I'm not gonna actually blow another computer day today. So let me just give you a little bit of background about myself. I've taught here at UC Denver since 2002, and in the course of that, and primarily business law, of course, and we teach ethics as well. Now, what's interesting about that is when I started teaching here, I sort of took the tact of the traditional way of teaching ethics in business, which is you introduce a bunch of philosophies and then you talk about and try to apply those philosophies to an ethics situation. And one thing that really excites me about the Daniels Fund Ethics Initiative is that it takes something that's not as practical as it could be, and we'll talk up a little bit about that more in a few minutes, and then turns it into something very practical and something that's very easy to apply. So Kelsey, go to the second screen with the overview. And this is what I want to talk about today. I want to talk about how we define ethics. If some of my students are here, they're going to think, well, he's stealing from himself from his own lectures, and that'd be exactly right. Ethics, how do we define ethics? What is it? What are some of the approaches to ethics? We're going to talk about insurance and ethics, and then we're going to talk about the pandemic and a little bit about business interruption insurance and what's going on in that world today. So let's go to the third slide. And this is about ethics is about right and wrong. So when we think about ethics, we're really trying to determine what's right and what's wrong. And you know, we put a lot of effort into this in our personal lives and in our business lives. Sometimes I think we overthink things. And when we are thinking about what's right and wrong, we end up really struggling with something perhaps sometimes that's totally different than an ethics issue. And let me explain that. It may not be as difficult as we sometimes make it. We allow our biases to enter in, our personal biases, and sometimes we allow rationalization to enter into our ethics decisions. And I think that's one of the things, and I'm speaking from personal experience here, and you will hear a few personal experiences from me because I'm human, and because I'm human, I've had some ethics decisions that I've needed to make, and I think that some of these will resonate with some of you to, I think, bring the human element to this. Let's talk a little bit about ethics, morals, and values. If you do an internet search and try to define, if you go definition of ethics, definition of morals, even definition of values, what you're going to find in Google and other search engines is that it is so muddled, you won't be able to find an answer. Now, ethics will be about what's right and wrong, but then morals will say, well, that's about right and wrong too. Well, what is ethics exactly the same thing as morals? Probably not. And so, and then we also have our personal values, the things that we hold dear. Let's talk a little bit about what these three terms mean, and then we'll move on and start talking about some of the how to apply those and how they might apply to both law and the pandemic and insurance. So if we just say that ethics is about right and wrong, we're probably pretty close to what we can accurately describe as what ethics is and what it should be. Morals, if we're going to distinguish that from ethics at all, we probably need a different definition, so we're just not talking in circles. But morals, I like to think, if somebody's a moral person, that means they make good ethics decisions. And they make good personal decisions about their own behavior. So you might say that's a moral person because that person does X. And you would probably say in the context of how we behave, is that person behaving in a way that society would regard as a norm, let's say. So ethics may be an esoteric question. It may be, and like we're going to talk here in a minute, Daniels Fund is a principle-based ethics analysis. But either way, you're kind of looking at trying to find right and wrong through not necessarily a direct approach, but sort of an approach where you're saying, what would I do in this situation? How would I resolve this problem? Then let's talk about values. Values are simply what we think are important. And our values are going to be driven by a lot of different things. I have gone through this exercise many times in my classes where I say to students and I challenge them, we all have the same values, right? And, no, we don't have the same values. But if you have the students write their top 10 values on a piece of paper, we pretty much all have the same values. One of the things about ethics that's important to remember is this. We often have ethics issues arise because there is a difference in values, our own values. Some things we value highly and some things we value less highly, and those things that we value highly are going to be those things that we emphasize and want to foster, whereas things that we don't value highly or as high as that, it may be honesty versus loyalty to your family, just as an example. Those two values are both very important. How you make an ethics decision that involves those two is going to depend on which one you think is most important. There's no really easy answer to that question. Each of us have to kind of ask that question and then answer it for ourselves. So we've kind of talked a little bit about ethics, morals, and values and what those are. I think we can kind of keep those things in the back of our minds as we kind of move along here. Then courage to do the right thing. I wanted to talk about this because I really believe that courage is a key component to ethics. It is human nature, in my experience, to make excuses, to blame others, to find ourselves in a position where we blame ourselves last. And that's just part of the human condition. How did we get here? Well, it's because so-and-so did this or that. And that's why we're in this problem. And then we very rarely turn the mirror around on ourselves and say, okay, how did you contribute to this problem? It is a very courageous and morally responsible, ethically responsible thing to do, to turn that mirror to ourselves and say, okay, how did I contribute to this problem? And did I contribute to it? I want to give you a couple examples and that I think illustrate why it's not always really that difficult to do the right thing. A couple of months ago, we had our grandkids over. This is the child's wisdom. We had our grandkids over and they were tossing around in the living room. And this is not a child-proof area. Our 8-year-old grandson, 6 and 4, they were all brothers messing around, having a lot of fun. All the adults were in the garage working on a project. They were throwing around in the living room a roll of bubble wrap. Seemed kind of fun. If you've ever played with bubble wrap, you know why they're doing this. Well, that bubble wrap goes flying and hits a bunch of things and breaks a bunch of glass. And then the screaming and crying that instantly resulted made you think that maybe somebody's hurt. Well, my wife goes running out there and it turns out that the only thing that was hurt was the fear of imminent punishment. The grandson who threw this out had kind of created a problem and he knew it. Because their dad was in the other part of the house, their dad didn't learn about it till later. And he said, on the way over, I said, you got to be careful about Grandma and Grandpa's house. Don't do anything crazy. Just go have fun, play with toys, whatever. And he said, how did it go? And the culprit, our 6-year-old grandson, said, it could have gone better. But he didn't offer any more. And our son-in-law said, well, what do you mean by that? And he said, and the 8-year-old piped up and he said, what I think is the child's wisdom here. He said, sometimes it's just better to tell the truth. And so the truth came out and everything was fine. Nobody got hurt. Nobody really got even disciplined for it. It was just an accident. They were horseplaying. But there's a lot of truth in that statement. Sometimes it's just better to tell the truth, no matter how painful it would be. And so this is an 8-year-old. They know that they should do the right thing and what the right thing is. Another example I have of this is that is a situation that I think had a lot of potential in my career, a lot of potential for blaming others, and it involved me. I got a research project when I was about 6 months out, and it was a very important research project for my firm. I worked for a big firm downtown Denver. And they said, go find a law, go find the leading case in Colorado on preliminary injunctions. Pretty simple. Well, I looked and looked and looked, and I wasn't finding, this is a fairly common thing. There had to be a case on it. This was kind of a mixture between going through the books like you used to do and then also a little bit of online. I could not find what I was looking for. Then I got called on to another project, and another associate got put onto my project that I've been working on. And I told this associate specifically, I said, listen, I don't think I found the leading case. You got to keep looking. Project went away. About a week later, I got a call from the partner who said, and he called us both in and said, you guys missed the leading case. I'm saying, what happened? And I kind of sat there and I didn't say anything about, well, I told this other associate that I didn't find the leading case. Here's what I did. He was kind of upset, not really terribly upset, but I thought, let me go find out what happened. So I went and I reconstructed my entire research that I had done. And I realized, yeah, there it is, right in the paper that some of the pages I've been looking in, I could have found that case. It was right there. So I decided to cop to it. And I said, listen, I didn't think I had found it, but I could have found it if I was being a little more careful. And I didn't realize we weren't going to keep looking, but that's what happened on my end. And I thought I was going to get fired. I thought it was a big enough deal that I was going to get fired. And the partner looked at me and, well, thanks for telling me about that, and moved on. When you have 3 small kids at home and you are just starting off with a big firm and you want to make a good impression, it is very difficult to sometimes do the right thing and to say, I'm going to take accountability for this to some degree, because to some degree I am accountable for what happened. I don't think it's that hard. I don't think it's that hard to know what we should do. I do think, however, that sometimes it just takes courage to do it. So I really want to emphasize the topic of courage when it comes to ethical conduct, and keep that in mind as we go along here. So I'm going to move to the next slide, slide number 4, which is ethics approaches. So like I mentioned before, a lot of the historical way that ethics is taught is through philosophical approaches. And this means, and the next slide, I'll show what I mean by that. But there are other ways to do this. Another way is a principle-based ethics, and this is exactly what the Daniels Fund is. And one of the huge advantages of the principle-based ethics is it doesn't require a lot of thinking about, gosh, what did Immanuel Kant say about X, Y, Z, and how does that apply to this situation? No, you just go to a list of 8 principles that we'll talk about here in a second, and then you start trying to apply those principles to the problem that you are facing. So let's go to the next slide here. It says ethical philosophies. So these are some of the historical ways that, and if you look at ethical philosophies and do a Google search, you come up with some of these. Immanuel Kant basically came up with something called the Categorical Imperative. And his idea was that pretend like your behavior, I really like this approach, by the way. It's not, just because it's a philosophy doesn't mean it's useless or something, or so vague that we can't apply it in business, because we really can. It basically says this: pretend like your decision is going to be the rule of the decision for everybody on the planet. When they're in a similar situation, they're going to do that. So would that be a good thing or bad thing for the planet, or for our culture, or for our country? And if the answer is no, it wouldn't be good, then it's probably not good for you to do it, even though you may be the only one impacted. Utilitarianism, you're probably familiar with. It's where you look at the utility of the outcome. It's basically outcome-based. Consequentialism is similar and related, and in that you're looking at what are the consequences of what you're doing. It's not crazy to say this is sort of ends justifies the means in some way. You look at the ends. What are you maximizing the utility to the most people by making the decision that you make? Another area is rights and duties, which is a very common legal way of looking at right and wrong. And So an example of that would be in the employment context, employees should give an honest day's work. The employer has a duty to pay the employee. And so there's, in an agency relationship, which is very common in the insurance industry, obviously, rights and duties comes up a lot because agents are working for the principal, which is usually the client, could be the insurance company, and then you have rights and duties that go along with that relationship. Another one I just happened to pull up is equity. It's becoming more popular today. It basically says equality of outcome is important. And there's a great emphasis placed on equality of outcome. So those are just some examples of ethics philosophies. Now, if you start thinking about this in a day-to-day way of trying to apply them in the workplace, it's not that easy to do. You kind of get lost in the esoteric thinking about some of these things, and you have to control yourself and say, okay, now I got to get back to why, if I were to apply the thinking of Immanuel Kant here, what would the outcome of my decision be? Okay, so it does take some thinking. Next slide, business practical application. One of the advantages of the Daniels Fund Ethics Initiative, and it states it right in the website, the Ethics Initiative and each of its components extend beyond philosophy, and they're basically saying, hey, we're going past philosophy. We're going to go straight to some answers, practical application of ethical principles as a framework for your personal and business life. And so that's what the Daniels Fund does. It has changed the way I think about ethics after we've been introduced to the Daniels Fund, and it has clearly, I think, improved my own ethics decision making, and I think some of the students as well. And I look at it in terms of the papers that they write and how they come to conclusions about what is right and wrong. And one of the things I think is so easy is that, let's go to the next slide here. It talks about the eight principles. The principles are really easy to follow. So if you just kind of compare and contrast this, the 8 ethical principles of the Daniels Fund Initiative, to those ethical philosophies we talked about that literally have tons of books written on them. So here we have integrity, trust, accountability, transparency, fairness, respect, rule of law, and viability. So you boil it down to 8 general areas, and you ask yourself, well, how is the action that I'm going to take impact the long-term, I'm just not taking an example here, but the long-term viability of my company? How does the decision that I'm going to make impact the long-term viability of my personal relationships with my family? How does this impact the trust that I have with other people, for example? It makes it much more direct and much more easy to come to an answer because you don't have to philosophize. Really, you just understand the principle. You're like my grandson. Sometimes it's just better to tell the truth. Build trust in all stakeholder relationships. That's kind of where it comes to the courage that we talked about. But so this is an introduction to what the Daniels Fund is and why I think it's important and why it has changed the way I have taught ethics principles or ethical thinking in my instruction here at UC Denver. So the next slide is law and ethics. I want to emphasize a couple of things here. In business law, in business, I should say, in business, you really don't have a lot of leeway about not following the law. And it's one of the Daniels Fund's ethical principles, rule of law, comply with the spirit and intent of laws and regulations. That is important to remember because if you violate the law, you're going to pay a penalty. It may be a fine, it may even be imprisonment. The other issue in business is corporate policies. You got to follow the corporate policies that are in place, and I didn't put that on the list here, but it should go right under follow the law. Follow corporate policies. Now, you may think that corporate policies are unethical. You may think that they're unethically applied or that they may be unethical. And if you violate a corporate policy, you're not likely to go to prison. You're not likely to have any criminal problems, but you might get fired if you're not following corporate policy. So hopefully the whole idea of a presentation like this and understanding and applying ethics in our lives has to do with making sure that a company is being ethical, and that its employees are being ethical, and that its policies are ethical, so that if you have a question, you can refer back to the policies of the companies. Go, somebody's thought this through. We run into this situation all the time. This is how we apply this situation. Here's how we apply ethics to this situation by following the corporate policy. So corporate policies are an area that ought to be imbued with whatever ethical philosophies and values that your company has. So the next slide is just a little bit of a slide that I wanted to share about the actual decision-making process. Whether you get into the ethical philosophies or whether you get into the principle-based ethics, you really need to follow some basic structure on making ethical decisions in business and in your personal life. So you gather the background facts. A lot of time in business, you have to admit, I don't know everything, so maybe you have to go gather it from coworkers and so forth. And then you have to ask, is there an ethics issue? And I want to spend a minute on this. And there's something that you probably heard of called the MOM test. There's a national headlines test. And these tests answer the question of whether, if I were to announce to the entire world that I'm about to do what I'm about to do, is that something I'm okay with seeing on national headlines? Or if I told my mother, would she approve? Would she not approve? If I told my dad, would he approve, not approve? These kinds of things can help us determine whether we have a dilemma. And going back to the values that we talked about, you could be faced with a dilemma because you have competing values. So this is kind of a step that just simply reminds us, okay, is this really an ethical question? Now, I want to tell you why I think this is a particularly important step. A lot of times when we're teaching ethics, we talk about Bernie Madoff. Those of you who know, Bernie Madoff was a finance kingpin in New York, probably 10, 15 years ago, had billions of dollars invested by investors from all over the country. It turned out that he was running a huge Ponzi scheme, and there were some people at the top of the company that knew, a lot of people that did not know. But you can ask, and so we end up saying, well, that's an ethics issue, right? I want to say maybe not. Maybe that isn't an ethics issue. The law already supplied an answer. Don't do it. Don't cheat people in a Ponzi scheme. This gets back to if you took my 8-year-old grandson and explained to him, hey, if you tell your brother that you're going to give him $5 and you give him a fake check or a fake dollar bill, do you think he would have a problem with that? An 8-year-old could tell you, yeah, that's not right. Bernie Madoff knew what he was doing was wrong. It's not really that interesting. If it is an ethics issue, it's not even that interesting because really the law provided an answer. So think about that. Then you have to apply relevant principles, and I use the word principles here because these are the things where you start looking through. It probably makes sense to make a copy of a set of principles that you want to live by. Am I showing integrity here? Am I treating everybody the same? Am I being transparent with what I'm doing? Am I treating people with fairness, respect? Am I following the rule of law? In the case of Bernie Madoff, you don't have to go very far here, do you, to realize he's totally off base in what he did, and he's paying I can't remember if he's still alive. I believe he is, but he's in prison still. So then you make the decision, and hopefully you've gone through these steps and you can see the value of having a process that you go through to think through ethical decisions. So now I want to turn to the next slide. It's called property and casualty insurance. So here, I want to point out that we're sort of shifting gears. So we've kind of covered the ethics part, and now we're going to get into insurance. What is it, and how? What are some of the ethics issues that we see in insurance generally, and then this year, because it's been such a crazy year? So let's get into it. Insurance is based on contract law. So you really can't separate law and insurance out. Anytime you have an ethics issue, it's going to involve law, and it's going to involve contract law, and it's going to involve the ethics issues that arise out of that contract. There's a long history here of the good faith requirement in every insurance contract, and it's was started in an English case called Carter versus Boehm, 1766, and if you want some great reading to do, I started going down the squirrel hole preparing for this presentation, and I realized, man, this is a great area to read, and then you can understand how the insurance world is related to the 7 Years' War, because that's where this good faith requirement comes up. Carter versus Boehm in 1766, the 7 Years' War started in 1756, so it was about 10 years earlier than this. But the judge who delivered this opinion established that in every insurance contract, there is a presumption of utmost good faith by both sides. And what that really means is this, and then I'll tell you a little bit about the case. But what it means is this: the insured who's applying for insurance has to disclose all material facts to the insurer. The insurer has good faith to pay claims that are legitimate and legitimately covered by the insurance contract. So what happened in this case was that a gentleman had about at least 10,000 pounds of property at a British fort located in India. He wrote to London saying, hey, I would like to insure these against loss, potentially with relating to any loss of this British fort. So the insurer provided the policy insurance, but during the 7 Years' War, the British abandoned the fort and he lost everything. He made a claim, and then the claim was denied because the insurer did not disclose that the fort was in a war zone. The insurer was in London, and basically the court said this: listen, the insurer, you should have asked about where is there danger of a potential of this being in a war zone? And it seems like from reading the case that one of the reasons that the court said that is because the 7 Years' War, also known as the French and Indian War here in the United States, was a war that was on 5 different continents. It was basically a war between English and French colonial powers. So it played out here in the United States and actually George Washington played quite a role in that, in getting the French and Indian, getting the whole war started by having a skirmish with some French soldiers where one of the French soldiers was killed, and then there was an immediate recrimination for that. And then George Washington actually had to surrender his troops. Somehow he got out of it, but the war had begun in the United States as well, in the colonies, I should say. But here's what the insurer said: listen, everybody knew there was a big war going on. If you wanted to be really specific about the risks, you should have asked the insured about that. And the court upheld for the insured and said, listen, if there's essentially what we would call a world war today, if there's a world war going on between France and England, everybody knows about it, and you can't say that you don't have coverage. And you might say, so there was coverage. And somebody probably sat around in about 1767 saying, you know, we should put a wartime exclusion in some of our policies, which is probably exactly what was starting to happen. But this is the case that creates the now very well accepted and almost universal law in the United States that there's a good faith requirement in every insurance policy. And those of you who are in the insurance industry know this, that you kind of dread the idea of having, you know, being accused of bad faith, because you know that there can be some extra damages that go along with that, and you just don't want to have to deal with that. So I would say that based on my 35 years of practice, there are lawyers out there who are very keen to bring that up every time they can, that, hey, there's been some kind of bad faith here on the insurance company's part. They're not meeting my reasonable expectations under this contract, and therefore I should be able to sue my own insurance company for not paying my claim or not paying as much as I wanted and so forth. So let's go to the next slide. You're going to have to excuse me for that. Agents are fiduciaries. So this is important to remember. So in the insurance world, we have agents who represent a company, and they could represent they could be acting as brokers as well. But this is agency law. Agents are fiduciaries of the principal. That means that they have the highest level of duty, trust, and loyalty. And it ultimately means that agents have to put the interests of their clients ahead of their own interest. And this has some real world implications for insurance. One is this idea of dual agency. You know, you can, whether or not you're a broker and then you do a lot of independent insurance writing, or you're sort of a captive agent, you work for one particular insurance company and sell that insurance alone, you're going to be an agent for your insurance company, but then you're also going to be an agent for your clients. So how does that play out? And you have a high sense of duty and loyalty and requirement for both of those sides. So fortunately, there are lots of insurance regulations that kind of tell, well, this is what you do in this situation, this is what you do in that situation, but it's not always easy to find your way through that. And that is where I think applying Daniels Fund ethics principles would be key, because you don't have to go to esoteric inquiry about this or that, but go, hey, am I building trust with my clients by doing what I'm about to do? So here's some potential pitfalls I listed here at the end. Am I overstating coverage when I'm in the sales process? Am I addressing everything the client has asked for? Clients, I can tell you, do not understand insurance provisions. They go to their brokers, they go to their agents, say, I need X. The broker will say, how much do you need? There'll be a number exchanged. But all of the ins and outs of what kind of coverage there may or may not be is often not even discussed. And that's a shame, because it's pretty important to understand what those requirements are. So you don't want to overstate coverage during the sale. And then there's the issue of, because you are a fiduciary, you may have different products that you can sell to the customer. Well, are you selling a product that benefits you the most at the expense of your customer? And these guys are a little bit better on paying out claims when they happen, but I can get a better, some kind of better benefit from that through that company as their broker and so forth. These are things where you have to ask yourself, okay, what about the long-term viability of what I'm doing? Am I being honest with my client? Am I letting the client know that I have an interest that diverges in these kind of insurance policies or not? So those are just some potential pitfalls that I noted could arise. Let's go to the next slide here. Agent responsibilities. It is not being in the insurance business is not simply representing the client alone. Every complex ethics situation, there are multiple stakeholders in play. And that is very true with the insurer. You have the insurer that you may represent, and you want to represent them accurately. You have the policy owner trying to meet client needs. trying to make sure you understand what they want and what they need. And then to the public, you're creating an impression for the industry, and to the state. Insurance is a highly regulated industry, and therefore there's an expectation not only to your clients and to the insurer, but also to the public generally, that people's expectations are generally being met. And when you're trying to balance all of these expectations out, there's no doubt that you're going to run into diverging values and competing values. So let's go to the next slide here, pandemics. Get into some of the crux of what we're talking about today. How often have you heard this year that we're in an unprecedented era, and this has never happened before? Well, that's a bit of an overstatement, isn't it? Because there's been things a lot worse than the coronavirus. But that's not to understate the problem. I'm not trying to do that at all. But pandemics, my point with this particular slide is to show that, insurance companies like to insure against things that are known risks, something you can quantify. We know there are so many tornadoes, they're going to hit so many places on average, and this is our percentage of the market in that area, and this is what we're going to need to charge to make sure that we can make a profit but still pay claims legitimately. And same with hurricanes. There may be a hurricane that can wipe out a whole city, as we know, but it didn't wipe out a whole coast of cities. And so pandemics are nothing new. And in fact, you can look at these, but it's interesting to note that there are about 3 outbreaks of influenza worldwide per century that are pretty serious. This is new to us because we've never really lived through it. Especially in the United States, we've only heard about some of the things going on in other countries regarding Ebola, for example, a very serious virus, and in other countries where it seems to be common to have a pandemic or an epidemic break out in that country, but we've always been insulated. That didn't happen this time, did it? So going to the next slide, it brings up the question of business interruption insurance, because this has been one of the major issues out there relating to the pandemic. And one of the points I wanted to make is that you can't really compare a pandemic to a tornado. A tornado has a limited scope of time and impact. And even though you could have a whole string of tornadoes that really do a lot of damage, you don't have something that can just like burn a fuse for literally months, like the COVID-19 is just burning away. And people are trying to hold it back, keep the hospitals from getting overcrowded. You have people's choices are going to impact whether or not they get COVID. Their jobs are going to be dependent on it. Somebody who doesn't have to interact with people, can stay home all day, they're less likely to get it. People who have to drive a truck, work in Amazon in one of their distribution centers, they're going to have a lot more interaction with people. So it's not like a tornado where it's just going to hit you. There's a lot of human contact, involvement, decisions that go into that. And so it's not surprising that after the SARS epidemic in 2003, where a couple of insurance companies did get hit with insurance claims for business interruption, that a lot of insurance companies started writing viral pandemic exclusions into their policies, because it's like, listen, we really didn't anticipate that. And insurance companies are looking more at measurable loss over a predictable event, either act of God, weather, something like that. Here with viral infections, it just burns, it can burn through the entire world, which it's doing right now. So there's you know, a lot of companies have this, a lot of insurance companies have this viral pandemic exclusion that came into play. What that simply means, if you have that exclusion, then you're not going to get business interruption insurance. The other interesting thing about this is typically to have a business interruption, they're looking for property damages. You know, did you have 2x4s flying around in a tornado? Did you have wind damage? Did you have water damage? What happened exactly to cause business interruption? It's a little bit different to have no damage to your business at all, other than people can't come in and work. The business is still there, the building's still there, the company's still there, and yet the business can't operate the way it used to. So today, just as a reminder, insurance companies do provide pandemic coverage for business interruption. And I just, in preparing this presentation, I looked on the internet to see what is out there. And there are quite a few of the big insurance companies providing, really by July of this year, saying, hey, here's what we can do for you. Now, what they're really doing is go back to that slide. Well, you don't have to go back to it, but think back to the slide that had all the pandemics on it. They're basically looking at that going, you know, if we look at the big picture of pandemics, we can put a risk, we can put the risk together on this, make a calculation, understand what we're going to have to pay out, and understand what we're going to insure. From what I could tell, a lot of these companies aren't like just giving you a blanket insurance coverage. They're maybe covering some salary for a limited period of time. There may be some delays in when they're going to start paying coverage and so forth. But so there are products out there, as a lot of you know, that will actually cover pandemics. So just because there's something called viral pandemic exclusion doesn't mean that it's not, you can't get any coverage for that kind of loss. So next slide here, intersection of ethics, pandemics, and insurance. So let's talk a little bit about this. One of the things to remember about the good faith requirement in insurance contracts is this. What you're really asking yourself, what are the reasonable expectations of the parties to the contract, both the insurer, who's looking for the insured to disclose every material fact that they know. And I have a funny story about this. I had a friend come to me about 10 years ago, and very unfortunately, his wife passed away of cancer. And 3 months before she passed away, he bought an insurance policy. And then he was saying, hey, the insurance company isn't paying out. And I said, well, did you disclose that she had cancer? No. And did you know that she had cancer when you applied? Yeah, but they didn't, you know, so I don't think they filled out the policy correctly, but the insurance company went back and looked at the medical records and said, you know, we don't have coverage because you didn't tell us exactly what was going on. So it's not, and I asked him why he did that. And he said, well, I just tried. I paid for a few months and just tried. But the good faith requirement is on both sides. If you don't disclose to the insurance company exactly what's going on, they don't have coverage. On the other hand, you have to meet the reasonable expectations of the party, of the insured as well. And one of the outgrowths of this good faith requirement that we've talked about here is the following rule. Applies in Colorado, and I've applied it in my own practice as a practicing attorney in Colorado several times. And it is this: if there is an ambiguity in the contract, then it's construed against the insurer. So let me just give you an example. I had a client who had a meth lab in his rental. He didn't do it. So one of his tenants just made a meth lab there. He didn't know what was happening. When the tenant got arrested, they cordoned off his place, and he had to completely tear it down. The insurance company denied coverage because it was a pollution exclusion. And we did a little bit of research on this, and we found coverage in I can't remember if it was a Colorado case or a case from another state, and said, listen, meth lab, basically our argument was this: meth labs are a well-known risk. If you wanted to insure around meth labs, just say you don't cover meth labs. I know insurance companies don't like to write things that way, where you start getting specific and naming things. But when ultimately a lot of times they end up doing that because they realize, hey, it's like the viral pandemic exclusion. We just have to put it in there. So there's no misunderstanding. we found a case that called the meth lab vandalism. Like I said, I can't remember if it was a Colorado case or a case from some other jurisdiction, but we sent that case back with a demand letter, and the insurance company ended up covering it. So they changed their mind. And I think the reason for that would be their desire to act in good faith. They may not have agreed with our argument, but at some level they thought, hey, we could have been more specific about that. Another example of this is in a case, this is a much smaller case without as much ramification, but it was a case where a contractor had leaked gasoline because the gasoline tank happened to be really full onto a driveway. And the insurance company basically said, hey, this is a pollution issue. And then we said, it's just a gas leak. It's not really, the damage to the driveway isn't pollution. It's just more of a corrosion problem. And you have corrosion, you're covering corrosion or not. And so it was something that got resolved as well. So if there's any ambiguity in these contracts, it is construed against the insurer. So next slide is something I already brought up, but the law with respect to ethics and with respect to the language of the contract itself does favor the insured. So the insurer has to make sure that they know exactly what they're putting in the policy, how that might apply. And we've talked about some of these other issues quite a bit, so I'll just skip those. Going to the next slide. What's interesting about the government intervention in the pandemic is this. I found that several states have introduced laws requiring insurance companies to cover COVID-19 losses. Well, my first reaction to that is, wait a minute. Even if you have a viral pandemic exclusion, these laws say that, hey, your viral pandemic exclusions don't cover this, or aren't effective. Now, I don't think any of these states, New York, Ohio, Massachusetts, or New Jersey, have actually passed these laws yet. But it's interesting, if those of you who've studied constitutional law knows there's a contract clause, and the federal government isn't supposed to just toy around with contracts for no reason and rewrite people's contracts without a legitimate reason for doing so. And I don't think this would actually fit into that category, but they're requiring this New York Bill A10226, which is still in committee right now, it didn't go anywhere. It basically requires insurance companies to cover small businesses that have had business interruption problems. And I think the way that the government is trying to get around the contract exclusion in the Constitution is simply by saying, if you, the insurance company, have to make a payout, we will indemnify you by you making a claim with the New York Division of Insurance. So very unusual to me. I'm not sure from reading the bill whether there was still a portion of that was supposed to be covered by the insurance company and the government would come in and cover part of it. But the issue is this: insurance companies have $8 billion in cash reserves right now, approximately, or they did at the beginning of this year. And a lot of the government entities think that the answer to the COVID problem, that the insurers should participate in that. Now, that brings up huge ethics questions, because you have to ask yourself, this isn't the only thing that's going to happen this year and the next year. And $800 billion is really a drop in the bucket, right? When it comes to this pandemic, we've spent $2 trillion on it. The government has already. People are still suffering. People are still losing their jobs. People's work, hotels and restaurants are still way underwater right now. And yet you haven't even scratched the surface. So you have to ask yourself, okay, if the insurance industry is going to help, how are they going to do it constitutionally? And why should the insurance industry, that is, like we've said, totally based on contract, why should the insurance industry have to come in and try to rescue people in contradiction to their own contracts that they have put together? So the next slide, arguments for and against such coverage. You could say that insurance companies need to do their part. This is an extreme emergency, and you may be able to think of some other other answers to that. But there's some strong arguments against the insurance company. Pandemic insurance is available. So if you wanted it, you could have got it. Pandemics are not unknown to private industry just as well as the insurance companies. The insurance company, you just have to pay for an extra premium. Pandemics are known risks that companies can anticipate. And there are exclusions for viral pandemics. And if we excluded those, then our contract says they should be excluded. And contracts should be respected. So the next slide. Here's some general questions for thought, just as we're wrapping up here. Do insurance companies have an ethical obligation to go beyond the law in helping pay for COVID-19 business interruptions? So we talked a little bit about the for and against that argument. How would such coverage affect other stakeholders who may need claims for other natural disasters, and would the insurance companies have to pay out those? What insurance companies don't have bottomless are bottomless. They do have limitations on the amount of money and reserves that they have. And then sort of on the flip side, is it ethical for insurance companies to raise coverage issues when their insurance policies are ambiguous with respect to coverage? So that kind of goes back to the issue, is this pollution? Is it vandalism? Honestly, I don't, a meth lab, I don't know if it's either one, but those are the kind of questions that if an insurance policy doesn't have a specific viral pandemic exclusion, and you have some kind of business interruption coverage, the first thing you're probably going to face is an issue about, well, was there physical damage? Because a lot of insurance policies require the physical damage. And if you can somehow get over that, which I don't know how you can in a viral pandemic, you're going to have to ask yourself if there's some other exclusion that might cover. And then finally, I raise the question, is it ethical or legal, even legal, for the government to require insurance companies to pay COVID-19 losses for business interruption that the insurance companies have not contracted to cover? And so here's some of just addressing some of these. Daniels Fund Ethics Initiative principles. We need to be concerned about the long-term viability of insurance companies. So there has to be a limit to what you can expect, because insurance companies have to make money. Insurance companies have to go forward. Insurance companies shouldn't be held to requirements that go far beyond their contractual requirements. Another one that might be there is fairness. And that has to do, I would also say that might have to do with the rule of law, again, referring back to the Daniels Fund initiatives. Contracts are private law between two parties. The rule of law means that you kind of are stuck to the contract that you entered into. It might not be something you like today, but if you could have bought pandemic insurance and you decided not to, precisely because doesn't happen that often, you just take your chances. Is that something that ought to be laid back on the insurance company? So finally, just some concluding thoughts, just kind of circling back a little bit now. Principle-based ethics approaches afford a direct and relatively clear path to making ethics decisions. And so I highly recommend that you become familiar with the Daniels Fund Ethics Initiative principles, because they are easy to follow, easy to apply. And then the other point to remember is to accept that our courage to do the right thing is going to play a role in our future efforts to do what's right. So with that, I'll open it up for any questions that folks might have, and then go from there.
Thanks so much, Garth. Really appreciate it. We did have a couple questions come in while you were presenting that we have for you ready, but for all of our attendees, just a friendly reminder, we do have a few minutes for questions, so feel free to add those in the Q&A at the bottom of your screen. First question for you, Garth, is from David, and he was wondering, when you were talking about the case, I believe it was Garth versus Beam, he was wondering if it was about a book or an article about this case that you're referencing.
It was actually an article online, and it's It's Carter versus Bowen, Boehn, and it's a well-known English case from the King's Court. And there's a lot of reading you can do on it. It's actually pretty fascinating to read it, because it's so interesting to think that the whole history of insurance good faith arose out of the 7 Years' War, and obviously in the United States it was called the French and Indian War, but so that came from just sources over the internet.
Awesome, thank you. And then we had another question come in: how insurance companies calculate how much to pay for claims?
Wow. Insurance companies want, first of all, one of the points I made that might have kind of slipped past is this point. Insurance companies like to insure against physical damage. Property and casualty insurance is about, you had an earthquake, or if you had a tornado, what is the property damage? We can go in and look, and we can estimate the amount of it would take to fix it. So you're basically, the insurance companies, my experience has been, will come in, for example, in the meth lab case, what they did is they came in and had an adjuster come in and make estimates about what it costs to rebuild that, to tear it down, clean up the meth, and rebuild it. So you're looking at the out-of-pocket cost to the insured. Insurance companies want to see hard numbers. They don't like pain and suffering ideas, even though I think those are, in personal injury cases, those are common. And insurance companies do factor those in. But those are the kind of things that I don't personally believe that insurance companies have a lot of problem with good faith and fair dealing if they're not going to pay a lot on pain and suffering. If you have, I can give you an example of where insurance companies can run amok a little bit on, and this has to do with underinsured motorist coverage, UIM, here in Colorado. Basically, you pay as part of your insurance, some part of your premium, to help you cover your losses if somebody who hits you does not have their own insurance. Well, that's your agreement with your insurance company to help you out when you need it because somebody else at fault and hit you. And then you can sometimes have situations where there's clearly, let's say $10,000 is owed. You're asking for 40, the insurance company doesn't pay. Well, I guarantee you, if you send a letter to the insurance company, this is auto insurance, not property and casualty, just auto insurance. If you send a letter to them saying, hey, you're not acting in good faith because you owe me 10,000 and you should, why haven't you paid that? You're just trying to, string me along here. I guarantee you, you'll get if the insurance company agrees with your point, you'll get a check and they'll say this, not final payment, but here you go. We agree, we should pay that. What they're trying to do is, meet your needs, pay what they believe the case is worth, and it's basically your damages, whether it's a personal injury case or whether it's something where there's business interruption, for example. What are your actual losses that you incur? Is it lost profit? Those things are going to be governed by the insurance contract and what kind of losses are covered. But I hope that answers your question.
I think that totally makes sense. Thank you very much. And I wanted to thank you again very much for presenting today. It was a great presentation, learned a lot. Great job.
It was my pleasure.
And we just had one more come in. So I'll ask real quickly here, Garth, if I may. Do I understand you correctly in that New York bill could overrule insurance agreements that currently exclude pandemic coverage? Have there been other insurances throughout history of the government imposing requirements that retroactively impact insurance agreements already in place?
Well, call me a simpleton, but when I hear stuff like that, not the question, but when I hear the subject matter of the question that the government is trying to impose contract requirements that aren't there, I think, how can they do that under the contract clause of the Constitution. I don't think it's even possible. And then I started researching a little bit more, and yes, that's what they're saying. You have a viral pandemic exclusion, but we want you to cover for some of these smaller businesses. I think it was less than 250 employees or something like that in New York. And then what we're going to, and I thought, well, how is that even for an instant pass constitutional muster? You have a contract that says you're not going to pay it. Well, what they did is they said, the insurance company, if you have to pay those claims out, then what we're going to do is we're going to indemnify you. So what's not clear to me from reading that statute is that, well, they're going to indemnify you for the whole amount or just part of it, or they're going to make the insurance company pay for part of it. My gut reaction is to the government is, yeah, they're probably going to try to make the insurance companies pay for part of it. I looked up that bill, and currently it's still in committee, as it mentioned in the outline, and that means it's really not getting very far. And I don't know about Ohio, Massachusetts, or New Jersey, how far those bills have gotten in those states, but that's essentially what the legislature is thinking about doing, is making insurance companies really voiding the viral pandemic exclusion. I don't think they're going to go anywhere because there's other ways to handle that. But I think essentially what those governments is, I haven't looked at all of these different kinds of legislation that's going on just in New York. I read the New York statute or proposed bill. Should say it's not a statute yet by any means. And what it did is provided a means whereby the insurance company could get reimbursed, but it wasn't clear to me whether that was 100% reimbursement or just partial reimbursement. I think it would have to be 100% to be constitutional. That's my opinion, but I'm not a constitutional scholar either.
Well, great. Thank you for answering that one last question. Thank you again for your presentation. Wonderful job. I just wanted to close out for us today and thank everyone for joining us. I wanted to give a big thanks to our partners, the Daniels Fund Ethics Initiative Collegiate Program, as well as the Colorado Cpcu Society. Thank you so much from the Risk Management and Insurance Program for partnering with us for the event. Up on the screen here, you'll see some links where you can find out more about the 3 co-sponsors of the event, the Colorado Cpcu Society, the Daniels Fund, as well as the RMI program, so be sure to check them out. And I wanted to echo Mark's sentiment earlier and give a huge shout out to our veterans. Thank you so much to you for your service to our country. We can't thank you enough on this Veterans Day. And as we close out here, take a look at the links, and we really appreciate you joining us. Hope everyone stays safe and healthy. Thank you.
Thank you, everybody.
Thank you so much, Garth.
Nice job. Thank you very much.
Thank you, Garth.
Hey, thank you, Ira.